Hi everyone, and thank you for tuning in to my channel where I talk about stocks, the stock market, and investing. I post videos daily, so if this is something you want to get more of, feel free to subscribe down below. In today's video, I'm going to be discussing Disney's theme park figures that are great news for investors. So let's jump right in. What I have pulled up on the screen here is Disney's most recently ended quarterly results, and this is for the quarter that was ended on July 2nd. And what you see here is I've highlighted the Disney Parks and Experiences segment, and it shows you the segment revenues and the segment operating income. In other words, the profitability. So the most interesting figure I'm going to point to is for the 9 months ended on July 2nd. So the first 3 quarters of Disney's fiscal 2022. Disney's theme park segment has delivered 21.28 billion of revenue, which is up 92% from the previous year. Now remember, last year a lot of the theme parks were closed or just reopening, still facing some capacity restrictions, and so it's understandable that it would be a major increase from the previous year. Similar with their operating income, it rose to 6.39 billion, up from a loss of 169 million last year. So I want you to keep that figure in mind, the 6.39 billion in operating income for the theme park segment in the 9 months ended on July 2nd, 2022, while I toggle to Disney's 2019 full year operating results. So now what I have on the screen is Disney's 2019 financial statement that shows how much revenue and operating income the theme park segment earned in the whole year, in the fiscal year that ends on September 29 for Disney. So September 29, 2018. So in that fiscal year ended September 29, 2018, Disney earned total revenue of 24.7 billion from the theme park segment and an operating income of 6.1 billion. So this is before the outbreak, before the pandemic. This is the profitability the theme parks earned in an entire year. Meanwhile, in the first 9 months of 2022, Disney has already exceeded profit levels from before the pandemic. The theme park segment has earned so far 6.4 billion with 3 months left to go. With the July, August, September quarter, the summer quarter, one of its most popular quarters in the year. So Disney's theme park segment is absolutely booming, and that is great news for investors. Now, of course, Disney held an investor conference on September 7th, and they were asked just a couple of days ago, and they were asked by an analyst about the theme park segment, and just to elaborate on what's leading to these spectacular results and if they can continue. And Joseph D'Amaro, the chairman of Disney's Parks, Experiences, and Products segment, had this to say: I think you know this, and a lot of folks out there know this, but our operating income is back above where it was even in fiscal year 2019. So even before the pandemic, what we looked at was fiscal year 2018, but it's even above levels from 2019. And here's a key thing he highlights: but our volumes are lower. So attendance is lower, but operating income is higher. And that's because Disney has made improvements to the theme park, and we'll look at some of those in a little bit in this video. But he goes on to say that was a strategic calculation they made because commercial reactions, this reset opportunity that we had to accelerate some of these strategies, we put them in place during the lockdowns or the shutdowns, that the 412 days that Disneyland was closed, the park in California. And so this was on purpose. They purposely increased prices and adjusted the business model to expand profitability, and Disney felt that they had the opportunity to do this because there was going to be a lot of pent-up demand coming out of the pandemic. After we were cooped up at home for the better part of a year and a half, 2 years, people wanted to go out and spend money on away from home experiences instead of spending money on things that we do at home. All right, further down along in the conference, he goes on to say that the demand pipeline looks robust. So looking out into the future, the next few months, the next few quarters, the demand still looks strong. So it's not slowing down just yet. And he goes on to say that they have mechanisms to look at demand because they can look at reservations, bookings in the hotel rooms, which are strongly correlated to attendance at the theme parks. So he's looking at that data and he's saying that demand remains very, very strong. He goes to the lengths to say very, very strong here. So it doesn't look like the boost in revenue and operating income that Disney's theme park segment is generating is going to slow down anytime soon. There is no evidence of that yet. Okay, this is probably not going to go on forever, but so far there's no evidence of it slowing down. And so that's what the chairman of Disney Parks was asked. What about in a recession? We're all monitoring economic situation and inflation is rising, and that's giving the Federal Reserve reason, or more than just a reason, to start increasing interest rates. That's raising the risks of a recession. And so he was asked, what about in an environment of recession? How is Disney's parks going to respond? And he said that they're pretty well situated to navigate an environment like that. One of the new things they implemented during the pandemic was a reservation system. So they have data on what demand looks like over the next few weeks, the next few months, the next few quarters. And so they could see ahead of time what's going on with customer reservations. And if customer reservations slow down, then he can slow down hiring, cut back hours on staff, and that way reduce expenses to match it along with the slowdown in revenue in ways that they weren't able to do 2 or 3 years ago before the pandemic. They didn't have this reservation system in place, so they didn't know exactly how many guests were going to be at the theme park on any given day. They had an idea, an estimate, but they couldn't get precision estimates because people could buy tickets and come to the park on the same day. You can't do that anymore. You got to reserve ahead of time. And so that has given them more information. So now let's look at Disney's conference call that they held on August 10 and what management had to say about the theme parks that should get investors excited and enthusiastic even more. So this is Disney CEO Bob Chapek on the conference call August 10, 2022, saying we continue to see strong revenue profit growth at domestic parks and experiences, even as our cruise ships and international visitation have yet to fully recover. Remember, Disney's cruise ship business is part of that segment, and that has yet to recover, what the CEO is saying. Domestic demand at our theme parks continues to be strong, and we're seeing continued progress in those businesses still recovering from the pandemic. So earlier I showed you that operating income is higher in the first 9 months of the year than it was in 12 months in 2018. And that's even before the company has brought back revenue from cruise ships, revenue from international visitors, which tend to be 20% of the company's business. The CEO goes on to talk about guest spending at the theme parks. Guest spending in the park and Disneyland Paris is 30% higher versus the quarter of 2019. So guests are spending each guest is spending 30% more money this third quarter versus the same quarter in 2019. Disney's making more money off of each visitor. Moving along, this is what Disney's CFO, Christine McCarthy, had to say about Disney's theme parks and the business prospects. So demand at our domestic parks continues to exceed expectation, with attendance on many days tracking ahead of 2019 levels. But even while the average daily attendance at our theme parks across the first 3 quarters was slightly below 2019, we've delivered significantly higher revenue and operating income over that same time period. Again, further solidifying what we've already seen in that revenue and operating income is better than before the outbreak. So it just goes to highlight that Disney's improvements made to the theme park have made that segment of the business more profitable going forward. So it's a stronger business now than it was before the outbreak. Per capita spending at domestic theme parks was 10% above the third quarter of 2021, but 40% above the levels from fiscal 2019. Each guest is spending 40% more this year than they were in 2019. That's a huge increase if you consider, if some of you have been to a Disney theme park, you know how expensive a trip can be. Now imagine 40% spending 40% more than you were spending when you went a few years ago before the outbreak. It's just another sign of the robust demand we have seen at our theme parks. Occupancy at our domestic hotels in the third quarter was 90%, nearly completely booked. Looking ahead, domestic demand at our theme parks continues to look robust, with current forward-looking hotel bookings and intent to visit roughly in line with pre-pandemic trends. And we know that they're making more money off of each customer, so when attendance actually comes back to where it was pre-pandemic, that could be another catalyst to boost revenue and operating income even higher. And this is while the Disneyland Resort, Shanghai Disney Resort, the theme park was closed all but 3 days in the most recent quarter because of lockdowns in China. So even with those closures, even with these restrictions and these volatile times where we're still in a pandemic, the pandemic has not ended, people are still getting sick and severely ill with COVID-19. And so that has an effect on Disney's revenue and profit because it relies on bringing large groups of people together in person. And so even during this time, Disney's theme parks have exceeded expectations. Revenue and profit is ahead of 2019 levels. So this should be very encouraging news for Disney investors. So let me know what you think about Disney's prospects down below. If you liked the video, please subscribe. Thank you for watching, and I'll see you next time.
I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular Stock Advisor. Stock Advisor has beat the market by more than 250%. Go to fool.com/Parkev to get your 10 stock picks now.